Good morning, good afternoon, everybody. My name is Nadeem Shamim. I head up the cash and liquidity proposition at SmartStream Technologies in the UK. I'm delighted to be hosting this session today. The focus today would be around stress testing. Really, what has the COVID-19 pandemic exposed operational challenges within the management of intraday liquidity? How is it critical to understand the processes that have been impacted by the pandemic? How is the reduction of staff, remote working, lack of automation, and real-time reporting being addressed? And how can treasurers receive up-to-date information? And finally, what sort of technologies are available to help with the key driver these days, which is stress testing of intraday liquidity, so as to help preserve liquidity at banks. First part of the session would be I'll do a short presentation on SmartStream's view on where the market is and what the treasurers need and how we can help. The second part would be a panel discussion, and I will introduce the panelists a little bit later on, and then there'll be Q&A. Look forward to a fruitful discussion. So I'll start with a short presentation around intraday liquidity management and what are the elements that treasurers are looking for around active cash and liquidity management, and then the impact of stress testing going forward as well. The reality is that COVID has impacted banks significantly, not only in terms of risk management, but also the operational challenges that they are facing. Before I go a little bit deeper into terms of what challenges that we should be considering, I just want to tell a little bit about SmartStream itself. SmartStream has been in the industry for over 40 years, and it's a leader in providing various solutions to banks across the globe. We have over 2,000 customers, and we've deployed solutions in 70 of the top 100 banks. These range from digital payment and investigations, cash and liquidity management, which we'll talk a little bit about today, fees and expense management, reconciliation, which is the bedrock of our capabilities, collateral management, corporate action processing, and finally the reference data enrichment as well. These products have been helping our banks to streamline operations and delivering cost efficiencies and enhanced risk management. And they can either be deployed on premise or in the cloud. And some of these are provided as managed services as well. With that in mind, COVID-19 has presented many challenges that are both personal and financial. Pandemic has had a major impact how we work and how, as a bank, they meet its obligations to its customers and staff and regulators. During these times, central banks across the globe have injected significant amount of liquidity, and only recently we heard that ECB had injected almost 1.4 trillion euros of liquidity to support the banks. Governments have acted to stabilize the market, support society and citizens, but staff are separated. They're in isolation, working from home at different locations, at different business continuity sites. This makes skills shortages more apparent than ever, where juniors are separated from experienced staff, and software is driven by menus and keystrokes. The focus has been on preserving liquidity. Let's face it, we hear about it from every other day that the banks are looking to preserve liquidity. Some banks have deferred paying the dividends to ensure there's sufficient liquidity in their books. Fed has capped such payments recently, you may have heard, whereas Bank of England has encouraged the banks not to pay dividends and hold liquidity. So the regulators are helping as much as possible where they can. So central banks are reviewing the stringent regulatory reporting requirements and stress testing. Several central banks, including PRA, have deferred the test, but they've not eliminated them. Recently, Fed published its stress test across US banks and some of the international banks. And that showed that there was a significant impact on the balance sheet and the buffers that the organizations need to consider. Extra focus comes from looking at all the different elements of risk, whether that is liquidity risk, operational risk, credit risk, and market risk. Each risk is interconnected and has a direct impact on liquidity itself. Moving on, we can look at, what are the challenges faced by banks themselves. So the challenges could be split into operational and risk-based as well. I'll focus a little bit on the operational ones to start with. So with operational, you've got remote working, which is causing a lot of challenge. Business continuity processes make it difficult for staff to work in the same location. As mentioned earlier on, you're working from home, and there can also be an issue around reduced level of staff supporting the BAU process. And there's an additional challenge to get the impact of real-time payments and faster payments coming through. Secondly, there are delays in getting the same information that we used to get. Delay in internal liquidity projections from ledger systems, from trading systems, from trade finance systems. Potentially in the past, what was being done manually through Excel sheets or through phone calls are being delayed. Challenges in updating the liquidity needs and then updating the liquidity positions before funding decisions still exist. In addition, the existing systems are not designed to operate in such stress conditions under pandemic. The pandemic has brought to fore. The existing systems are designed to work on intraday basis, where usually overnight you get the information for the following day. That puts a huge amount of constraint on the organization itself. There are legacy systems are impeding timely, accurate, and confident decision making. It's exposing some operational vulnerabilities as well. So what that means is the information is delayed, leading to a compromised position. That is a challenge for CFOs and CROs as well. Finally, on here, there's a reduction of staff. Now, that could be due to illness in home country or in back office locations where the work is outsourced. This also means that there's a reduction of fully trained staff. So that can lead to skills shortages as well. So again, it's highlighting that there are operational vulnerabilities as well. What does it mean? Well, it means it's taking longer to support the BAU process. It's highlighting the inefficiencies, leading to potential errors and increased risks. So operational inefficiencies leading to increased risks. And then finally, reduced ability to generate liquidity positions reports in a timely manner. That means funding decisions that are made may not necessarily have the most up-to-date information. Now, what does a treasurer need? If you think about it, in these scenarios, it is now more than ever that banks need to know what liquidity they hold, how they report this position to the respective regulator, and how do they enable their staff to meet their customer needs. In addition to that, they also need to be able to make sure that they meet their staff needs as well. So short-term liquidity management dialogue is becoming more a real-time dialogue. It's no longer acceptable to receive information which is from yesterday. And in stress conditions, it's even more important that the information is up-to-the-minute information and nearing real time, if not near time. This is an opportunity to focus on the value of real-time management of liquidity. And then it has potential to generate revenue as well, if we're able to look at which of your clients are demanding the use of liquidity. In addition, a treasurer needs to understand how to stay within the internal policy guidelines and be alerted of breaches as well. Would like to get early warning on excessive changes in liquidity. This could be potentially due to fraudulent transaction or an early warning of a counterpart stress. Want to get an alert if there is a shortage of liquidity due to a large payment or run on the bank. Alert if expected funds that have not arrived, leading to shortage in liquidity as well. So have an automated way of providing these early warning alerts is becoming key for a treasurer these days. What does that mean? That so the treasurer is feeling confident that they can protect the bank, change the driver of managing liquidity in the short term to intraday liquidity into a best practice and a must-have. So it becomes a must-have to protect the bank. Moving on, I have a few more ideas in terms of what does a treasurer need. Well, under stress conditions, treasurer needs to be able to predict the settlement time of receipt and potential mispayments. What would happen if liquidity of your customer counterpart and bank delays payments? Does the treasurer know where the crunch point is? There is a risk of loss due to failure of a Nostra agent or an overconcentration at a Nostra agent. Even though in the short term, regulators have delayed stress testing, banks need to carry these tests internally to counter liquidity crunches. Stress testing exposes vulnerabilities in the risk management framework, allowing you to plan for remedial management actions to avoid failure. Simply leaving a large amount of cash is no longer acceptable. That's considered as passive management. This is about self-preservation and survival. So the question would be, are you confident that you have done everything to protect the bank? Looking at the impact of stress testing and managing the liquidity on an active basis, we've estimated the cost saving for reduction in liquidity buffer. We work with Beringa Consulting Partners. They have estimated that every $6 billion of reduction would lead to an annual saving of $50 million US. And that's quite substantial if you start looking at the larger amount of liquidity buffers that banks are being asked to hold. With that in mind, I'd like to talk a little bit about what we can do to help in this conversation. Let's take a look at what a model bank would be. It's got operations, risk, compliance, treasury. As a general rule, you'll find the various functions that are sitting within the different parts of the organizations. There may be a little change depending on the organization, but operations tend to be the name says, operational, create the positions, just follow the controls that are set by the compliance team. There's a lot of processing, repetitive work around it, and risk management follows through in terms of controlling the guidelines or defining the guidelines and monitoring the guidelines as well, and manage the risk. And treasury, as you would expect, manages the funding part of the requirement. So how does SmartStream capabilities fit in within this particular environment? So we have multiple modules within the cash and liquidity proposition. Start off with cash CMS, which is cash and management services. As you can see, the dark gray is focusing primarily on the operational side of it. Where there's reconciliation, there's sweeping, there's adjustment, fails management, and the account forecasting takes place. With that information, the liquidity position is calculated and cash ladder is provided to the treasury to make the funding decisions. The other element is the intraday liquidity management. It's more around the analytics around intraday liquidity and how do they address the requirements from the regulators under, for example, BCBS 248 or the PRA's requirement on reporting on intraday liquidity, but also have some analytics around the key metrics of what is happening to the liquidity on a regular basis. In addition to that, stress testing is moving swiftly from being a regulatory burden to a must-have, especially now we see this in the pandemic and situation, and financial environment is quite strained. And this is a situation which has never been seen. So in order for a bank to know what's happening to the liquidity, they need to be able to stress that position, create different scenarios, and do a large number of what ifs, which tends to be quite a challenging and a burdensome piece of work. And the final element is PFC, what we call payment flow control, that now that you know where your liquidity is, you know where the liquidity crunch points are. You need to be able to see how can you manage the flow of payments as long as you stay within the guidelines as well. And finally, what I would say is why us? Our proposition is there to help banks by providing quality information in actionable time frame. It helps to monitor the intraday liquidity in real time and short-term liquidity in real time, manage the daily processes with a fully automated solution, which means that there's a reduction in requirement of resources to meet your monitoring and reporting obligations. It helps improve the business continuity process through the reduced reliance on manual interventions. Provide you with live alerts. We have talked a little bit earlier on about treasurers need to get alerts on limit breaches and be alerted of any threshold being breached. And it does not require a large team to investigate issues. In addition, it delivers on-demand intraday liquidity stress testing capabilities where a user can change scenarios, execute them at will, instead of having to wait several days, if not weeks, for the change in scenarios. It allows a bank, a treasurer, risk officer, help protect the bank. Thank you for listening to the presentation.